welcome to The View from IMF. Today I'm joined by Ajay Kanwal, the CEO for South Asia and ASEAN at Standard Chartered. Thank you very much for joining us.
Thank you.
So first off, Ajay, I know that your position was created after Bill Winters was appointed as the CEO of the bank in 2015. This was part of a big reshuffle and structural change in terms of management at the bank. How did that change the coverage for Asia, and how has it improved your part of the business?
So I think the first thing that happened with Bill's appointment and the creation of these regions was we did take a step back and look at our strategy. And we came up with three simple answers. I think the first simple answer was Asia truly was going to grow or continue to grow at a pace which would outpace the world growth. So amongst the fastest spots and the most exciting places to grow, Asia certainly would be on the top end. So that was pretty much clear to us. The second thing that happened was, based on meeting lots of clients and feedback and our own experiences, we knew that we had long history in these geographies. So if you take India, we're in India for 158 years, in Singapore 157 years. So we had long histories in these geographies. We knew the clients, we knew the regulators, we knew the governments, and we had a lot of brand value. So second thing we came out very clearly was we had a very strong franchise and a very deep franchise in these geographies. And I think third piece which came out very clearly was that there was a big role for a bank to connect Asia to rest of the world and the rest of the world to Asia. And if you see our franchise, very unique. It's a UK-based entity focused on Asia, Africa, Middle East. So any large corporation or a mid-sized corporation or a small corporation going into Asia or coming out of Asia into the West, we pretty much are the bridge. So three big elements for us. And at a time when Asia was looking back and saying, hey, it's a difficult time. Are the banks still looking at Asia seriously? Really helped a lot that Standard Chartered went in and said, we are fully committed. Asia, Africa, Middle East strategy remains consistent. And I think that was very, very, very strong.
And in terms of the markets that you cover at the moment, if you had to single out those that are most exciting for the business at the moment, which ones are they and why?
So good questions. But the way I would term it is I must tell you a little bit about, I run ASEAN and South Asia. And what I found very interesting when I took this job 1 year back was to see how the ASEAN trade within ASEAN had grown tremendously. So if we take a 10-year period, 1993 to 2003, I found three numbers very, very relevant. First one, within ASEAN, the growth rate had been about 10% odd. So ASEAN trading within ASEAN, so Singapore to Malaysia, Malaysia to Thailand, Thailand to Indonesia, that piece was really going very strongly. Second piece was the biggest trading partner had become China, right? And the growth rate roughly in that period is about 20% on a compounded basis. The third element was India. India had grown to about 17%. So ASEAN within ASEAN 10%, with China 20%, with India 17%. India, in fact, the last 5 years, the fastest growing trading partner of ASEAN. So what struck me quite strongly was this whole ecosystem being built, that Asia was actually funding Asia and Asia was doing a lot more with Asia, which I had not thought so deeply of and wasn't so visible to me. So the exciting piece really is connecting Asia, I feel, and certainly to the big geographies of making India and China. And of course, I must say that in the last 2-3 years, the Indonesia part is being growing much more strongly. So I wouldn't single out a single geography, but I would take this trend as a very powerful trend.
Asia within Asia.
Asia within Asia, and certainly how the axes are working together. And if you think a little bit longer and deeper, it's a virtuous cycle, right? So if you see this whole trade growth, the GDP growth leading to more affluence, leading to more consumer buying power and spending, leading to even more GDP growth. So it's literally like a virtuous cycle slowly taking off. And I think it's very powerful. I think it's very strong.
But when we look at the potential risks in the region, however, a lot of banks across Asia are becoming increasingly worried about corporate debts. Household debt is not so much of a problem in many of these countries, but corporate debt is becoming an issue. In terms of dealing with such a problem as a bank, as you said, it's UK-based, in this region, especially, for example, in India. I know that for the increases in bad debt for Standard Chartered actually mostly is coming out of that country. The non-performing asset issue is growing. How do you deal with it as Standard Chartered in Asia?
So I think first is for us, while we are certainly a UK-based bank, we do have long histories in these geographies. I think the two very simple answers to how we could avoid some of our challenges. You can't avoid all the challenges because banks are exposed to economy, right? So if economy is not doing well, you certainly won't do as well. But what we could have, what are avoidable issues, it really appeared as two things. The first one was concentration on sectors, and for us, commodity was one sector. So the one clear action we took was downsize our commodity from a 60 plus billion to a mid 30s, close to 40 billion range. So we did that very, very consciously. And so that was the first thing, was we had exposure to a sector which shouldn't have as much. And we are very happy where we are right now. The second thing was on concentration on single entities. So we put in a cap of what a risk concentration acceptable to us. So while we did have a lot of concentration caps around what we were on countries, we thought we had to tighten a few caps. So once you took that into account, I think the big challenges are over. For any bank, you will have a normal, what you consider as a BAU or business as usual NPL, right? If you're a bank, you do take risk and some risk will not work. But to have risk which are outside your tolerance levels was the one which really caught us off guard. And we put in caps. And the other thing we did, which was very, very useful and very helpful, was we very early on took these accounts and said, listen, these accounts don't look good to us. Here they are, and we're going to address those. So we took this, what we call as a $20 billion RW, and said we're going to work on these accounts, and rest of the bank can pursue normal growth. And I think that helped a lot because it allowed rest of the bank to move on and do its business as it needs to be done. And there was a clear focus on addressing issues after being honestly recognized. I do think a lot of the recognition in Asia is still going on. And so to that extent, I think we were ahead of the curve in a way.
Okay, well, thank you so much for joining us, and good luck at the rest of the meetings.
Thank you so much. Good seeing you.